In this video today, we're going to be looking at whether or not the equity markets are way overbought and primed for a correction, or how much further upside they might have in them. We're going to be taking a look at the dollar. We're going to take a good look at where we will become neutral on the dollar. We have been maintaining a very strong bearishness on the dollar, way ahead of the game, and we want to stay that way. We're also going to be taking a look at gold and silver. A lot of people feel like they're dumping today. A lot of people want to know whether or not they're still on the right side of that trade. We're going to take a look at that and a whole lot more. If you're new here, welcome. And if you're not, welcome back. We still have about an hour to go to the close. And yes, that last hour of trading is the most important. But we have so far, we have the NASDAQ making pretty tremendous gains, up another 1.3% so far. Dow also up 0.5%, and S&P up 0.6%. Markets continue to look very healthy. I'm going to look today with you. I'm going to be looking at a few different things. One thing that I really want to focus in on over here is whether or not we've come too far too fast. And if not, how much further we can go. So pay attention to that. That's going to be a good one. I want to start with the dollar and get right into gold and silver. I think that might be weighing on a lot of people's minds. Right now on the dollar, if you watched the live stream this morning. By the way, someone pointed out in one of the YouTube comments, this is really interesting, okay? They pointed out that this structure over here, starting over in late March, when we saw this consolidation period, watch, you could see 1, 2, 3 over here. And on the bottom, we had 1, 2, 3, and then we broke down. Look at the structure of this, right? It's not the exact same, but it is very similar to what is developing over here. Here's the 1, 2, 3 high, and then we went down, the 1, 2, 3, 4. It's very similar. It's a consolidate. Look, I'm going to put both of them side by side so you can see. The only main difference I see in these two patterns over here, they're both consolidation patterns. Remember, as soon as we were trading right about here in early August, we said, watch out, we're consolidating, right? Watch what's happening over here. You see over here that we definitely broke below the channel over here, as well as right over here. Aside from that, these two are putting in very similar structures, except for that this one was much bigger and probably therefore led to a bigger move. This one is smaller, right? But on the downside, what are we targeting? We're targeting first 90.84 and then possibly 88.40. That's as far as we'll take it. The furthest two support levels below us, that's what we have our eyes on. What happens right now? We saw that the US PMI numbers came in a little bit better than expected today. They came in expansion territory. You're seeing the dollar a little bit bid today, right? All right. So first of all, every time the dollar was bid over here, you had everyone saying, oh, look at this. The dollar's putting in a bottom, making a rebound. First of all, that's not happening. Okay. Right now, what is happening, this is what's really important, is that over here, this was the support. Right? This was the support that we broke, came up for that small retest, or back in, that we're coming up to retest right now. This is extraordinarily bearish still. We need to break above this resistance right here in order to say, all right, maybe we need to be more neutral. But right now you're expecting or looking for, if you're rejected over here, this is where you have a nice entry to the downside. That will play out on US dollar pairs. Now, the other thing that could happen is we do break above this resistance here. At that point, we just become neutral. We're back into that consolidation area. It's really over here at 93.30 that we have to get above, because a rejection over there would send us back bearish on the dollar. If we break above 93.30, at that point, we'll be looking for a larger correction, and we'll be there together to analyze it and figure out what levels we're looking for. I don't want to get too far ahead. I just want everyone to stay focused on where we are right now so that everyone stays on the right side of the shade. Do not try to pick bottoms. There's no need for that. We get the sweet spot of the trade. Is it possible that we're bottoming in here? Yeah, of course that's possible, but that's not happening yet. Okay. As far as gold, right? A lot of people say gold's dumping. Gold right now, I'm looking and it's actually unchanged on the day, and I'm looking at silver down 0.7%, right? Couple of things to focus on over here. While we're above this support over here coming at 1,956, 1956, this is very, very bullish. Notice that we are putting in new swing highs and we are putting in lower swing lows. So far, this remains a very bullish structure on gold. A lot of people are getting very nervous. That means either one of two things. Either you're positioning yourself oversized, too big, or you're chasing momentum. All of us are always preemptive of momentum. Our entries come before the move. That's what you want to be doing, so you're in a position of control. If you find that you're chasing after trades and as soon as you're entering them, the trade's going against you, you're chasing momentum. That's a losing man's game. That's something to focus on. Focus on your most glaring errors first. So while we're above 1956, this is super bullish here on gold. Again, we're right now making higher swing highs and lower swing lows. If we come back down and lose that area, 1930 over here, 1929, that's also an area of support. Look for a resumption off of it. That's a buying opportunity. Both of these are buying opportunities. I don't want to jump too far ahead, but I do want to caution people about having everything tied to the dollar when it comes to precious metals and Bitcoin. Okay, Bitcoin, first of all, regardless of what the Fed's doing, regardless of what the dollar's doing, it's beginning its bull run. 2021 is going to be explosive. During that period, Bitcoin is going to lose its correlation to everything and do its own thing. Now, gold is trading off of largely the increase in the Fed's balance sheet, the increase in the US government's balance sheet and their debt, and it's also trading on the enormous amount of negative yielding debt globally. All right, what's happening right now? Look, by the way, 70% of adults in the United States, now that doesn't matter what party they're affiliated with, they believe that there should be another stimulus payment. They believe there should be another stimulus. One thing to make note of over here, it's the youngest demographics, 18 to 34, who show the lowest, are the least in favor of that. They're the ones that are going to pay the highest burden for this anyway. It's not fair, but life's not fair. That's not what this is about. What we're looking at is more stimulus coming. This is coming from the government. The Fed is providing cover. The whole inflation versus deflation, how much money, everyone here knows how much their expenses, whether it's for housing, whether it's for food, whether it's for education, whether it's for medical, have increased. Everyone knows that we are experiencing inflation. Now, whether or not you're falling for the Fed's deflation cover so that they go ahead and continue to print more money, that's another story. That's neither here nor there. But what the Fed is looking to do is they are looking for that cover and they are going to be continuing to print more money. They're going to be expanding their balance sheet. Gold and silver are going to continue to trade accordingly. We are in a bull market. You are looking to buy off of supports. Right? Long-term trades. Bring up your time horizon. We use foreign exchange to make our money on as swing traders. That's where we look for. All right? As far as gold and silver, continue to accumulate. Bitcoin having a good day today, breaking or posting a print at $12,000. Pretty nice. Ethereum leading the way. We looked at that. In the live stream yesterday morning and said it looked like Ethereum was trying to lead the whole crypto market higher. Today it's up 10%. Extraordinarily nice. We like to see that. I do want to get into the equity markets with you. What I'm here to do is provide. What am I here to do? First of all, I'm here to keep everyone that follows me on the right side of the market. That's important to me. Second of all, I'm here to provide you clarity to help you in your own trading. Now, I do read all the comments. I know what a difference this channel has made, and I have no idea how many people it's actually touched. I find out here and there, and it really moves me, right? But I just want to give you some perspective, because right now, things do not make sense. What do I mean by that? If you look at future price to earnings ratios, things do not make sense whatsoever. Keep in mind, right? Right now, we looked at it yesterday. Right now, they're equal to or thereabout to the dot-com bubble peak. What's different? Did you see now the Federal Reserve owns $1 trillion of mortgage-backed securities? Did you see that? That's insanity. Did you see that the Federal Reserve now owns 23,000 securities? Did you see that? Did you see that the Fed's balance sheet has expanded by $4.1 trillion this year and will continue to expand over the next 3 and 6 months? Right? What about government spending? All right. So I want you to look at this chart. This chart's really important to give you a little bit of perspective. Now, I'm not saying at any time that we can't have a correction. Corrections are healthy. When markets go straight up, they're not. Okay? But my concern is that every time you see a red candle, everyone thinks the market's crashing. That's not the market's crashing. That's a pullback. A correction is deeper, right? What's a correction? 5% pullback, on 7% pullback. Those are corrections, right? What I want you to see right now is this chart over here. I want you to see this chart over here. I like looking at this chart. This red dot signifies when the NASDAQ is up more than 2% to a 52-week high. Fewer than 53% of the stocks on the index are rising that day. All right. So when the NASDAQ's making new all-time highs and fewer than 53% of stocks are rising that day. Now I want you to check this out over here. The last time when we made new all-time highs on the NASDAQ over here, do you remember everyone thought that we were way overbought and we were going to get a correction? I did a video back in the first week of July and I said we were just getting started. Do you see over here this red dot? This is the first red dot, the first time that happened, right? Now, do you see what happened? We had a series of red dots. This is parabolic, by the way. This is a parabolic move. We had a series of red dots. Right now, we are right over here. We are right over here right now. By the way, if you go ahead and you look at this V right here, and you look at that V right over here, and then you come back all the way over here, look at this area over here, this area over here, all the way back to this V down over here. These two, this is a fractal of this. They line up so closely together. The only thing that's different is that these two valleys over here, they are further apart than these two valleys. But these two fractals are almost identical. We are right here right now. We are right here right now, right below that first dot over here. Do you see that? So when I talk about we have a ways to go, we have a ways to go. Now, the question then becomes, well, then why do I think equities are risky? Why don't if the big move is yet to happen, why not be invested in equities? Because there's simply better trades there. Those that follow the channel, they understand what those better trades are, right? Bitcoin is trading at $12,000. We're targeting $140,000. I like to set goals that I think I can meet. This is a trade where the risk to reward is greatly in my favor. All right. Nevertheless, I'm going to follow what's going on here with the equity markets because the markets themselves, they all work together. It's like a living, breathing organism. In order to stay in the flow of the market, you need to follow the breath of that market. That's why we follow the markets we do. It helps us when we place our trades where we place them, no matter what we're trading. All right, everyone. That's it for today. I hope you enjoyed. If you did enjoy this episode, please go ahead and smash that like button. Leave a comment below sharing your thoughts. I'm so happy to be sharing this with you. I hope it is a benefit for you. If it is, actually, this is a great time. Please share your story. I'd be grateful for that. I'll see you all in the morning. Have a beautiful day, everyone.